Hey guys, welcome. I'm Manisha Gupta, and you've joined us on Moneycontrol. And the whole day, the focus clearly has been on the changes that the financial bill has done in sense of amendment to various things. But I'll keep the focus on to mutual funds and debt funds, where the investments with less than 35% of equity will be deemed as short-term capital gains. The long-term capital gains or the indexation benefits is something that has been done away with if there is less than 35% of equity investment. So clearly, these are the supplies on investments that will be made on or after 1st of April 2023, and this will impact not just the debt funds or the international funds, but the gold funds as well. So whether it is about gold ETFs, gold mutual funds, fund of funds, you will see an impact of all of this coming in for all of these instruments. Well, the indexation benefit also will not be available in case of long-term capital gains on gold. And while the market believes that this wouldn't really have too much of an impact on the retail investor, because not too many retail investors invest in many of these gold funds, it really is going to be about institutional investors, which will see an impact of this coming in. The HNIs and business investors may actually see a shift going out of this because when you invest in gold, it usually is for a longer term. So it's about the long term capital gains that many of these investors look to stand to gain from there. Well, when you look at the mutual funds itself, the gold mutual funds, that is, the investments the market anticipates could go down anywhere between 20 to 30%. To begin with, it's not a very big market when you look at within gold, because when you categorize the kind of gold investment that India does, it still is 80 to 85% in sense of physical gold. And then you have mutual funds, then you have sovereign gold bonds, you have gold ETFs coming in, mutual funds, fund of funds, etc. So the major chunk still is about physical gold. But as we move ahead, we've seen other of these markets expand as well. And the expectation is that 5 years from now, you will see a percentage or two come off the physical market annually, and you will see it going towards other financial instruments within gold itself. So mutual funds could see some buying coming in, funds of funds, yes, but the major increase really could come in for the sovereign gold bond. There are various positives here. To begin with, there is no tax here. There is no commodity transaction tax that you pay here. There also is a 2.5% plus token interest that per annum that you get into your account as well, over and above the way the gold prices will move. So sovereign gold bond clearly stands to gain because of this. You will see money coming in for this. As I said, most of the gold investments really are for a longer term. And in case of sovereign gold bonds, it's an 8 year maturity with 5 year redemption option as well. So this is one instrument you will see a lot of focus coming in from. As I said, when you look at institutional investors, they perhaps may not be too moved, but HNIs, business investment ideas, which have been going in case of gold, perhaps will start moving into this. Sovereign gold bond, since 2016 when it was launched, we have seen every year see higher investments, and the expectation being that 2023 will not be any different. And especially with this tax move now coming in because of the latest financial bill, you will see SGBs clearly stand tall.